Hello everyone, welcome to RichPuff channel. In the last few years, the concept of freedom of wealth has been brought up often. Many people understand this term literally, thinking that there is enough money to spend for a lifetime if they gain financial freedom before retirement. However, is this the true fact? Do you really understand what money is? If you want to become rich, you will have to change your perception and mentality towards money, and if you want to be able to do that, all you have to do is to subscribe to this channel. In this video, I will first propose a concept that may destroy all initial values towards money, followed by ways of creating passive income, and lastly, to lead you towards the pinnacle of life. The final content of this video will be the most valuable, with tips I've never shared with anyone, values out of my own realization, so make sure you stay until the end of this video, and I assure you that your business mind will rise several levels. I sincerely hope everyone who gives these videos a thumbs up will receive a financial freedom soon. Going back to my initial questions, I asked, if you really understood money, be physically prepared, as the way the world's top entrepreneurs view money would completely change the way you look at it. Money is actually just a piece of waste paper in the hands of the majority. The real value of money can only be seen by exchanging it with something else in return. If you manage to exchange money for assets, then you gain. If you exchange it for more debts, like failed investments, you lost. Many often think that thrifting or saving money is a good habit, to always save it in the case of rainy days and for unforeseen circumstances. But the real truth is, if you save up all the hard-earned money in the bank, your initial savings after 20 years will still look the same. However, its value has depreciated. For example, with $5, you may be able to eat a bowl of beef noodle soup, but in 20 years' time, you may only be able to buy a plain bowl of only soup and noodles for $5. Your money has slipped away unknowingly, although it is being stored safely in the bank. This concept is called devaluation. In the Stone Age, men used the barter system to trade for goods, like using 2 cows to trade for a weapon. But later on, it became more difficult to achieve consensus of the value of goods. How many different kinds of spices were supposed to be asked for in exchange for shoes from the shoemaker? Comment down below if you have a funny theory you would like to share. These goods then turn into bronze, silver, and gold coins, and then into paper for the sake of convenience towards mankind. This proves my point of money being just a waste paper if it sits quietly in your bank, with its value depreciating as time goes by. Economists would categorize this as inflation, where money is getting more in the market, leading it to become less valuable, thus the price of goods rises instead. The individual who holds money will come to dominate the world. This is because they can use the existing money to create more money, getting richer each day. With that being said, how do we become the dominating end who holds the power of money? 1. Real estate investment. Wealthy people turn cash into real assets, leading to passive income. People often say, buy houses if you have the money. Some will start up with a small studio, then sell it and buy a bigger flat and upgrade afterwards to bigger houses. However, these are liabilities if you stay in it. This is because you would have to fork up money to pay up your housing loan. Although you have a huge bungalow in the end, it is still a liability to you as you are not getting passive income from it. However, if you have a comfortable home to stay in, you could use some extra cash to purchase real estate and rent it out. Passive income in real estate is known as one of the best ways to gain an additional source of revenue, attain security in retirement, and ultimately design a roadmap to achieving financial freedom. As many do not have the ability to buy their own houses, they will opt to rent out one until they can afford it. They may end up for renting for years, in a way helping to pay up your loan for the house. Rental properties secure a steady revenue of steady income, which also gives you the freedom to make improvements to the property and brand equity. If you are lucky to purchase a property near universities or office buildings, you could even renovate your house by adding extra partitions, renting it out per room. If luck is on your side and you manage to buy a house at a below market rate, for example, the house intrinsic value is 500,000, but you deal with the owner for 400,000 due to his urgency for money to clear off his personal debts, you automatically gain 50,000 profit. On top of that, the value of houses generally appreciates as years goes by, unless it is in a very unfavorable location. Thus, if you choose to sell it rather than renting it out, you could mark up the price slightly for a better profit. To earn passive income from rental properties, you have to determine three things: the amount of return you want on investment, the total costs and expenses, and the financial risk. For example, if your goal is to earn 10,000 a year in rental cash flow and the property has a monthly mortgage of 2,000 and costs another 300 a month for taxes and other expenses, you will have to charge for 3,133 in monthly rent to reach your goal. Economic downturns might lead to tenants who couldn't pay rent on time. Thus, contingency plans have to be made to protect yourself before your income from rent declines. All in all, real estate is a great asset in helping individuals to build their wealth. 2. Gold investment. If you are willing to venture into property investment, invest in gold instead. Gold maintains a considerable value even when paper currency is weak. Gold is valuable in every country, even if you have the pawn for emergency cash. However, if you subscribe to this channel, it will lead you on to the right path, teaching you various ways to gain more money, making sure that profit is always more than loss. History has shown us simply buying large amounts of this coveted metal. The great thing about this asset is that there is a type of gold for everyone. If someone wants to invest only in a small amount, they could purchase coins. People who have more money to spare can purchase gold bars and store them, selling it off for a higher price a few years down the road. Do take note that wealthy people do not store large amounts of gold in the US. Current legislation states as the government has the right to raid and seize safes containing gold. Do opt to make a concerted effort of storing them offshore in countries like Switzerland. This might prevent you from losing all the gold that you invested in case of a crisis. Apart from the physical gold bars and coins, you could also invest in the value of gold. However, there are certain risks upon investing in gold, so make sure to purchase and invest only when the time is right. 3. Stocks. Wealthy people hold stocks, mutual funds. They have a nice stock portfolio and they can sell it off when they find out it's the time to sell it off. They can turn shares into money at a blink of an eye. In some cases, they will hold the stock for future earnings and appreciation. Sometimes, they invest for dividends, so they hold dividend stocks. Shareholders in companies with dividend-yielding stocks receive a certain amount of funds deposited into their brokerage account at regular intervals from the company. If you own the stock, the company pays you cash dividends on a quarterly basis out of their profits. The more shares you own, the higher your payout as dividends are paid per share of stock. Since the income from the stock isn't related to any activity other than the initial financial investment, it could be one of the most passive forms of making money, earning while you sleep. Choosing the right stocks are the key, as companies issuing a very high dividend may not be able to sustain it. True investigation of the company's financial statements has to be done beforehand. You could also go with exchange traded funds, also known as ETFs, as they are also investment funds that hold assets such as stocks, commodities, and bonds, but they trade like stocks. ETFs also diversify your holdings, so if one company cuts its payout, the ETF's price or dividend does not get affected too much. ETFs could be a great choice for novices to gain passive incomes, as it can be easily understood, highly liquid, inexpensive, and have far better potential returns because of far lower cost than mutual funds. All in all, these are three main assets wealthy people hold to become richer. An individual has to change their state of mind towards money. If you continue to think in the mentality of a poor man, you will always stay as a poor man. Instead, if you open up your minds and be more willing to take risks, you could live your life like a rich man. This world will not let you earn money outside of your cognitive ability. In other words, every penny you earn now directly reflects on the level of wisdom you possess. I would like to end this video with a famous saying: you must spend money to make money. If success came at no cost, everybody would be a millionaire, right?